Hi everyone, this is a technical analysis on gold. Let's start on some fundamental background first. Last Friday, gold rallied strongly on the back of the news of an imminent Iranian retaliation, but eventually gave back all the gains as some Iranian officials indicated that it will be a calibrated response. Over the weekend, Iran launched its operation with drones and missiles against Israel, but almost all of them were intercepted and there were no casualties. In the end, Iran said that the operation was deemed concluded, and we got reports of general de escalation, with the US telling Israel that it won't support a retaliation. We might see some positive resentiment in the European session, which might put some pressure on gold. In the big picture, gold should remain supported as we head into the easing cycle, but in the short term, the hawkish repricing in the rate cuts expectations is likely to weigh on gold, especially if the rate hikes start to be put on the table at some point. Now, on the daily chart, we can see that gold last Friday spiked above the 2,400 level, but eventually erased all the gains and ended the day lower. From a risk management perspective, the buyers will have a much better risk to reward setup around this trend line, where they will also find the red 21 moving average for confluence. The sellers, on the other hand, will want to see the price breaking lower to increase the bearish bets and target a bigger drop into the next trend line around the 2100 level. On the 4-hour chart, we can see that the price has been diverging with the MACD, which is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, it could be a signal for a pullback into this trend line around the 2275 level, where we can also find the 50% Fibonacci retracement level for confluence. We can see that the price bounced on this minor trend line last Friday as the buyers stepped in to position for a rally into a new all-time high. A break below this trend line should trigger a sell-off into this major trend line as the sellers will likely pile in more aggressively. On the 1-hour chart, we can see that we have a minor resistance zone here around the 2372 level, where we can find the confluence of the 38.2% Fibonacci retracement level and the red 21 moving average. If the price gets there, we can expect the sellers to step in with a defined risk above the Fibonacci level to position for a break below this trend line with a better risk to reward ratio. The buyers, on the other hand, will want to see the price breaking higher to increase the bullish bets into a new all-time high. This week is a bit empty on the data front with just two notable reports. Today we have the retail sales data, while on Thursday we get the latest US jobless claims figures. Strong data is likely to weigh on gold, while weak figures should give it a boost.